All right, welcome back. We got a earnings update. Last week we had a ton of earnings, and we're going to start off focusing on Amazon, and then we're going to roll through a ton of companies here quickly, but we're going to spend the majority of this video on Amazon and the other Mag 7 companies that reported last week. So Amazon revenue at $168 billion for the quarter. That's up 13% year over year. And all segments of their business are growing and growing at or near double digits year over year. Their fastest grower is going to be advertising. That's up to $16 billion in revenue for the quarter. That's up 23% year over year. And you've got AWS, which is growing at 17% year over year. That's up to $31 billion in revenue and $10 billion in profit. So when we look at their operating profit of $19 billion, most of that is AWS. Over half of that is AWS. So that's going to be their big cash cow. And Amazon with a total net profit of $18 billion. So not a lot. Net profit $18 billion with revenue of $168 billion. But Amazon is reinvesting a lot of their revenue into the business, especially AI, to help grow their revenues down the road. So we'll talk about their CapEx here in a moment. But the quarter at a glance, revenue beat, you've got EPS beat, margin was up, gross margin was up, free cash flow was down because of their CapEx. And in Q2, they spent $31 billion alone on capital expenditure, and they are on pace for $120 billion for the full year of 2025 when it comes to investing, and that's primarily in AI. So they are the largest spender when it comes to AI. Online stores was up 11%, physical stores 7%, third-party sellers growing as well. We already talked about advertising. Their subscriptions was also up 12%, and AWS is looking at a $123 billion run rate for the year. So this company is doing very, very well. The ads are crushing it. So Prime Day set a record in sales and new Prime signups. Ad revenue, $16 billion, now 160% of YouTube ads. So they are gaining ground on Meta. And when we look here at the some of the Mag 7 companies' advertising revenue, you've got number one here is Google Search at $54 billion. Number two is going to be Meta at $46 billion. Then you've got Amazon, number three, at $15.7 billion. And then you've got YouTube down here at $10 billion. So Google is still the leader when it comes to advertising. They've got over almost $65 billion in ad revenue, and then number two is Meta. So these companies are just crushing it when it comes to advertising. Everyone uses these products. Everyone uses Google, YouTube, and Meta's family of apps, and everyone has Amazon. So everyone is using their apps, and so they're able to continue to charge and get new customers when it comes to advertising. So these companies are crushing it when it comes to ads, and we'll see if they will crush it when it comes to AI. But definitely what I've noticed in these calls is they're using AI to help make their advertising more efficient. And so the customers will pay more for ads, and those ads are becoming much more, they're bringing in more business for the people that are paying for the ads. So it's kind of a win-win there, and it's costing these companies less to push those advertisements out. AWS is still the giant, but they are losing their lead. So I believe this is the reason why the stock was down after hours. Amazon was down about 8% after they announced their earnings. They still hold 30% of the cloud share, with Azure at 20% and Google at 13%, but these other guys are growing at a faster rate than Amazon. So we can see their growth revenue year over year is staying steady at 17%. Again, as the numbers get larger, it's hard to grow at these high percentages like they did. But when we look here, their revenue and operation income, this chart still looks very good, but their operation income was down slightly from last quarter. And I assume that's because of the investment that they are making on the data centers and their own cloud. So here is just a visual chart here of the cloud infrastructure from these three giants. So you've got AWS 30%, Microsoft 20%, Google Cloud at 13%. And so Google Cloud has been really catching up to Microsoft, and Microsoft has been catching up to Amazon. So it's kind of like a little chase that's going on here. But the whole market here is up 25% year over year. And you're just seeing some other tier 2 cloud providers like Oracle, Huawei, Snowflake, Cloudflare, Databricks, and CoreWeave. These guys are also doing very well because this whole ecosystem is up 25%. So all these companies are getting a little piece of the pie. Some of them are getting a little bit more than others, but they're all growing at a nice clip. So some of the infrastructure, they talked about the own chip that they're making. They've talked about some of their models when it comes to Claude. Everyone says they have the fastest model, so everyone's hyping up their own models. But they are definitely using a lot of AI for themselves, and then also robotics. They are using quite a bit for their legacy business as well. Project Kuiper, we've talked about that in the past. They are looking to create a SpaceX competitor, so we'll see how fast that can continue to scale, but they are looking to keep rolling that out. Not a whole lot of updates there. And this is the big news here for the quarter as well. So the capital expenditures for these companies, they just keep spending. And so this is a great chart here that shows how much these companies are spending and the rate of increase that these guys are spending. So Amazon is going to be spending $120 billion this year. You've got Microsoft in number 2 spending $88 billion. Then you have Google spending $85 billion. And then you have Meta spending $68 billion for the year, which is just head and shoulders over where these companies were in the past. And their revenues are also moving up, but not at this rate. So we will see if this spend that they're doing pays off down the road. I think it will, but they almost have to, because if you're Microsoft and Google is spending all this money, you have to spend just to try and keep up and not lose your market share. And same thing with Amazon. But it's just, this is all going to NVIDIA, it's all going to Taiwan Semi, and it's all going to the cloud companies that support them. Those chip companies, the data centers, and which we will see here in a moment when we look at other earnings. These guys are pumping money into the rest of the market. So that's going to be about it for Amazon. Let's go ahead and move on to the other names here. We're going to start off with Microsoft. Microsoft up to $77 billion for the quarter, up 18%. Again, Microsoft Azure up 27% year over year. But all of their business segments are up pretty nicely here. So net profit of $27 billion for the quarter, crushing it here for Microsoft. Let's take a look here. Revenue by segment, you've got Microsoft Windows, Azure, and then the other guys down here. But all of these businesses are moving quite nicely, except for looks like, what is that, Windows and Xbox slowing down a little bit. Azure growth continuing to grow, 39%. Just unbelievable growth, especially for how large this company is. And a lot of this is going to have to do with AI. So Microsoft crushed it. They were up nicely after hours. They gave up some of that on Friday after the jobs number, but very strong performance for Microsoft. Apple, this was a very interesting quarter for Apple. They got 10% growth year over year on revenue at $94 billion. iPhone is up 13% year over year. Computers up 15%. The iPad was down 8%, and Watch and AirPods were down 9%. While services are still growing very nicely at 13% year over year, and Apple had a net profit of $24 billion for the quarter. Again, the breakdown here, iPhone crushing it. These large spikes here is when they have a new super cycle out for the iPhone. There hasn't been really an announcement in a while, except for a purple phone. But you can see here the services is growing very steadily, and the services is very high margin, profit margin, which you can see here. The gross profit is getting close for services to meet that of the iPhone. So that's a great move for Apple to start to transition from products to services, and those services are very high margin. So pretty good quarter for iPhone and Apple. They talked about potential pull forward of the tariff for this quarter, but they didn't see that there was a huge pull forward. They just saw just regular high demand for their products. All right, Google, we talked about Google in previous videos, so we're going to skip that. We just talked about Amazon. Let's see here. Netflix, 11 billion for the quarter, up 16% year over year. Net profit of 3 billion, so pretty solid here. When we look at the margin trend, you've got what are we looking at here? Gross margin increasing, operational margin increasing as well, so just nice and steady. This is an interesting chart here. So this is the total streaming percent across the United States. You've got YouTube being a very steady grower and the leader here in the space when it comes to streaming. Streaming, number one, YouTube. You're watching it right now. Netflix at a nice second place here at 8%. Staying pretty steady, not growing a whole lot, but holding its second place spot there. Prime Video doing well as well there at 3%. And then you've got Hulu and Disney at about 4%, and then everyone else at 16%. But the whole space is definitely continuing to grow. People are just going to keep popping back and forth depending on what they want to watch. But YouTube holding steady the whole time here. And you can see that here. Total TV time market share, YouTube continuing to go up. Netflix was slowing down a little bit, but it's starting to tick back up. So we'll see if they can close that gap on YouTube. But YouTube is crushing it. Spotify, 4 billion in revenue, up 10% year over year. They did have a small loss, but the monthly active users is the real story here. So they continue to grow. They're up to 251 million monthly active users, and they are spread all over the world. So they are a global company, and they just continue to grow. It's crazy how these companies like Spotify and Netflix just keep adding users, and I guess that's going to be, LATAM, rest of the world, places that are just now getting smartphones. They're starting to add on to Spotify, because I'm like, who hasn't added Spotify, at least in California, unless you just got an iPhone. But the rest of the world is getting caught up when it comes to technology, and those are the people that are most likely going to be the new users. So yeah, a lot of growth here for Spotify. You can see like Latin America here just exploding, growing a lot faster than North America. Europe booming here as well. Gross margin here for Spotify just staying pretty steady, but the monthly active users, this chart looks phenomenal. Just huge growth stock here. And we're going to see a few companies where their earnings their profit doesn't look that great, like Spotify, but this is the most important part of their business, is continue to get more monthly active users, and that's eventually they'll be able to cut back on expenses, maybe raise prices, and that's when the profit will start to kick in. But these companies aren't worried about profitability right now. They're just worried about getting more active users, and that's what their main priority is, not profit. All right, we're going to skip a lot of these names. Roblox had a good quarter, up 21% year over year. Meta crushed it, 22% year over year increase in revenue at 47.5 billion. Advertising, that's what their business is, advertising. $47 billion for a net profit of 18 billion. Just crazy. I mean, this is a nice looking income statement right here. They do only have one business, but they do have a family of apps here, and their operating profit here looking nice. They're still losing money on the VR segment of their business. This is just crazy to think about. Daily active people on Meta's family of apps, 3.5 billion daily active people for Meta. Unbelievable. Average revenue per person is around $13.50, so they're just crushing it. And they are going to continue to spend on AI. We'll see what they do with it, but they have the users. Now, what will they do with their AI? I don't know, but it's going to be interesting. Reddit, crushing it. Revenue up 78% year over year. Really good. We already talked about Tesla. Let's see what's next. GM, revenue down 2%. Ford, revenue up 5%. Grab, revenue up 23%. I believe they're primarily in Southeast Asia. They do Uber and DoorDash kind of company here. But monthly transacting users, nice looking chart here. All right, let's see. Taiwan Semi. This was a great quarter for Taiwan Semi. Revenue of $30 billion. Now, this is the company that makes all the important chips. And you can see here revenue up 44% year over year, and high performance computing, which is 60% of their revenue, that's up 8% year over year. So they're crushing it there. Net profit of about 13 billion. This is just a phenomenal business. Totally monopoly. Just such an important company, and they are just crushing it. So we'll see what it looks like when they bring some of their fabs to Texas and Arizona. We'll see if they bring over the high performance computing or maybe just some of the other small segments of their business, but they're just crushing it. And this again, this revenue increase is from Nvidia. It's from the spend of those mega cap companies that we looked at. They're spending hundreds of billions of dollars, and a company like Taiwan Semi is sitting there. They're getting those checks that are being written out. And so is ASML. So ASML makes the machines that Taiwan Semi uses to make the chips. So this whole ecosystem is crushing it. Sales up 23% year over year. Net profit, 30% margin. Looking good there. And ASML dumped after their earnings. I think their guidance was a little weak. But this is kind of a cyclical business because you don't need machines every month or even every year. So that's why things are all over the place here for this chart. It's not a steady grower like we saw with the cloud and some of those other businesses. This is a very cyclical type business. All right, ARM revenue up 12% year over year. Looking good. Qualcomm revenue up 10% year over year. KLA, this is a, I believe this is another, wafer inspection. So they are part of the chip manufacturing business. Their revenue's up 24% year over year. Again, a beneficiary of all the mega cap companies spending. Here's not a beneficiary. Intel, revenue flat. They're still getting 13 billion in revenue, but they have a $3 billion operating loss. This company is just stuck in the mud. Not looking so hot here. Texas Instruments, revenue up 16% year over year. Net profit of 1.3. Lam Research, this is another lithography company, foundry, memory, so they make the machines. That is up 34% year over year for revenue. They're looking very solid here as well. AT&T, Verizon, T-Mobile, Comcast, Visa, revenue up 14%. MasterCard, you've got revenue up 17%. American Express, revenue up 9%. All right, Coinbase, here we go. Revenue up 3% year over year. They did have a small operating loss. The big thing that I noticed here was stablecoin revenue up 38% year over year, and their subscriptions up 72% year over year. But other than that, not a whole lot going on here. I would have thought that their consumer business would have been a little stronger. So I'm curious to see why that is. And I think we'll see here in just a moment why maybe their consumer business was a little softer than expected. Cloudflare up 30% year over year. Looking good. So the banks were interesting. You had JP Morgan Chase was the biggest disappointment here. I'm not sure why, but all the other banks are doing just fine. And we will touch on companies like Morgan Stanley, Goldman Sachs, the asset management and investment, those banks that primarily focus on that, those companies are crushing it. All right, let's take a look. Where are we at here? Schwab. So a company like Schwab, they are a bank, but they're primarily focused on brokerage accounts, investment advisory services, things like that. They're crushing it. Revenue up 25% year over year for a net income of $2 billion. Same thing with Morgan Stanley, more on the investment side, wealth management, 12% year over year. Goldman Sachs, same thing, asset management, up 15% year over year. BlackRock, asset management, up 13% year over year. Robinhood, investment, asset management, up 45% year over year, and probably taking some of that crypto business from Coinbase because their revenue was up 97 or 98% year over year. This company's crushing it. And the amount of new products that they're announcing, just killing it for Robinhood. PayPal up 5% year over year. SoFi, another company crushing it. Revenue up 43% year over year. But this is, again, the most important chart. Look at their members. They're up to almost 12 million members, and this growth chart is just phenomenal. So great job for SoFi. Now when we look at their profit, lending and financial services are the big contributors here, but definitely lending is still the biggest horse in this race. But we're seeing the financial services be the fastest grower for this company. Really enjoy SoFi. They're a great company. Anthony Noto's a great CEO. All right, what else we got? Etsy, Coca-Cola. Coca-Cola revenue flat. Pepsi revenue flat. Let's see here. Starbucks revenue up 4%. Chipotle revenue up 3%. So, we're going through a lot of names here, and it's pretty clear there's a lot of companies that are doing okay, but there's some companies that are just dominating, and those are going to be the cloud, the semis, technology. Those guys are just killing it, and that's because the story is AI and AI spending. Boeing up 35% year over year, so they're having a little bit of a bounce back. Commercial airplanes are up 81% year over year, maybe because all their old planes are falling apart and people need to buy new ones. I don't know. Let's see, Lockheed Martin flat, the airlines flat. These are just terrible businesses. They're essential, but they're just terrible investments. Let's see here, United Healthcare revenues up 13% year over year, but the stock is in the dump. So their operating expense is $106 billion. So this company is just, they touch a lot of money, but they lose a lot of money also. And they've got a lot of regulatory headwinds coming their way. All right, some healthcare names. Johnson & Johnson, 6%. Procter & Gamble, pretty flat. Kraft Heinz, down. Mondelez, up 8%. Hershey's, up 26%. Adidas, pretty flat. I don't think there's going to be much else here to go over. LVMH revenue down 4%, so some of the luxury segment not doing so hot. Okay, I think that's about it. We went through a lot, but I think the big takeaways here is investment banking crushing it, AI crushing it, tech stocks crushing it, advertising crushing it. Everyone else doing fine. There's nowhere that's really struggling besides Intel, but even Intel they're fine. They'll be around. So pretty strong earnings so far. We got more names coming next week, but these mega cap tech names are just pretty unbelievable. The amount of money they're making, the profit they're making, and the reinvestment that they're doing. And we're at the early innings of this AI phase, so we'll see where it ends up and how that affects their revenues down the road. But long video. If you're watching till the end, hit the like button. And that is going to be it. We'll see what happens next week. All right. Peace out.